Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is November 26th, 2024, and I'm sure you're all hearing the same thing. Buy the dip. Buy the fucking dip. Stop complaining. Bitcoin's up X amount. We've only come down X amount. Buy the dip. We're going up soon. Look, we found support. This is what we're going to talk about today. What does it mean to buy the dip? How can you do so safely and in an informed manner, okay? Because we all know that nothing goes down in a straight line, nothing goes up in a straight line. So there are going to be many dips. There are going to be many sort of threats to the upside. There are going to be many bounces. You can't get excited at all the bounces. You have to learn to discriminate between a local bounce, a minor bounce, an intra-wave correction, as it were, and the end of a trend. So that's what we're going to talk about today. And I'm going to say this. All right, so we're starting, right? You get really good at discerning dips intra-wave before the trend is finished in the bear market, because that's all you fucking see for literally 4 years. The price is going down. You're like, ooh, maybe there. It's going to bounce. Oh, that's a strong bounce. It's a nice level of support, but it doesn't. And then it breaks that and it keeps going. That's quite literally the definition of a bearish trend. The definition of a bearish trend is, or one of the definitions of a bearish trend is when the price finds some sort of support, it doesn't react positively to that support. It finds only temporary support, breaks, retests, and continues. And by sort of conversely, the definition of a bullish trend is when price finds resistance, it breaks, retests, and continues. Resistance, breaks, retests, and continues. Resistance. That's the definition of a bullish trend. So it's up to you to identify the larger trend. That's the first thing. First, identify the larger trend. And the operative word is larger. So you got to zoom out. You can't be on your 5-minute, 15-minute time frame and say, oh, I see a bounce, I'm going to buy there. That's amateur stuff. And you should have already learned that lesson in the bear market. That's what the bear market's for. The bear market's for losing money. The bear market's for learning how to do this shit. Because now that the bull market's coming, to be able to maximize your profits, you should have gained these skills. Okay? So that's the first thing. Now, how do you identify how to buy the dip? First thing is you have to learn to properly read the price action. Okay? There's actually two ways. I'm just going to say it. There's learning to read the price action and then using some good indicators that you know how to read very well. That's how I do it. Okay? But price action is first and foremost. If you're an actual chartist, you can do whatever you will with indicators, but first and foremost is price action, and you're comfortable and able and willing to read the price action in a naked way. And it tells you the story, and you have to understand that story to the best of your abilities. Obviously, you're not going to get everything right all the time. So zooming out, you look and you try. When I say zooming out, and let's get rid of our stochastic RSI, because no indicators in this phase, yeah? We're exclusively looking at the market trend and the price action and what the price action is telling us. The price action is telling the story that since this level of 70K, we shot up. We shot up in such a way that for those of you who don't know, this represents a multi-year channel, okay? So a multi-year channel was broken to the upside, And in a number of days, we reached a target. And that target, actually, for those of you who may not know, was the height of this descending broadening wedge of 7 months. Okay, so we actually hit a technical target there. Both hit a technical target and breached a high time frame resistance. Okay, so two things happened. So we understand that as a breakout on the charts, when this happened, even before we reached our target, we should have known that we were coming back. We should have known, because it's a principle in technical analysis, that high time frame resistances have to be retested as support. It's called an RS flip, resistance to support flip, before continuing. So that is a given. That's something we know. That's something we're looking out for. But technically speaking, let's say we don't know that. We're looking at the price action and we're like, okay, if this is turned around and this is indeed a rounded top and it means a retracement, I can't be so amateurish to think that this sideways correction, this, wave 4 correction, let's call it what it likely is, this wave 4 complex flat correction is going to be enough to hold the price. And then we continue. Another thing is, if you look at enough price action, you know that this doesn't look right. In no universe have you ever seen price action that looked like this. It just doesn't look like that. So that's another thing. Experience will just tell you it doesn't look right. And I think that is one of the principles in the wave principle by Prechter and Frost. I would say a seminal text on Elliott wave theory. The look, I think Prechter and Frost described in one of the chapters. You just know, and that is something that's gained with experience looking at charts. It doesn't look right. An amateur would think, oh, I see a bounce on the daily, and that daily candle's bounced, so it must be, because that's a high time frame, right? It must be that it goes. No, nobody with any experience would tell you that that is a legitimate bounce. And we all know that you're going to get some reaction because you had multiple days of sideways price action, but seldom if ever does price find a support on one of these rising wedges with dirty tops. Dirty meaning it's not a very clean resistance. It's kind of like there's wicking. That's all stuff that is acquired through experience looking at charts day in and day out. There's no other way I can explain it other than it just doesn't look right. So you're looking for high time frame resistances or high time frame support levels. Okay, the top of this channel, it's a multi-year channel, right? Because it's resistance on the bottom, now it has to be support. So that's why I have the price bouncing on this level. We're going to get a reaction more likely than not at this level. But then it begs the question, is that the ultimate support level? Is that where we turn around? That also doesn't look right. If you just picture it, right? And there are tools on TradingView where you can extrapolate. You can have these candles show up here so you can really visualize it. That doesn't look right. It just doesn't make any sense. Price doesn't do that, right? It doesn't make any sense. This would then have to be some sort of contiguous corrective pattern, and it's not. So that doesn't make any sense. So this doesn't make any sense to be a support level, and this doesn't make any sense to be a support level, although you're going to see a reaction here. Remember, and this is the great thing about zooming out and having a plan, so that once the price starts doing what it does on the way down, nothing shocks you. You're not going to overreact to any green candles here and there, because you just know that's what price does. It doesn't just fly down, although at some point you're going to see this what we call a a cascade of liquidations, just a strong candle, right? Every dump is different, but likely you're going to see some fighting to try and reclaim that bullish trend. But it's done and over with until we reach rest, repose at our final at our final support. And so yeah, so we ruled this out. They're just not strong enough. And it wouldn't be a sufficient retracement for it to make sense. So up until now, our reasoning is that it just doesn't look right from our experience in looking at the charts. See, it's really hard for me to say, hey, here's a video on how you buy the dip. There's really no other substitute than just looking at charts day in and day out and getting really comfortable with how they look like, and then you see what retracements are supposed to look like. You can study all you want, but in the textbooks, the 5 waves up and the 3 waves down seldom look like what you see in the charts. So you just have to look at a bunch of charts and be familiar with what these retracements look like. So if that isn't the final one, and we may very well get a retracement here, and why do I have this sort of retracement, this reaction going all the way up here? It's because, look, this, again, another principle of technical analysis, sideways for a lot of days. These are all daily candles. You're going to want to, price just loves to do this, retest lost support, right? Because we're kind of finding a little bit of support here, right? Look, do you see this? And those technical analysts on Twitter that are drawing this line and saying this is support, we're going, it just tells you how much they know. So now do your own research, and when they're giving calls, know better. If they look at a chart and think that this is some sort of running flat correction, that this is a complete retracement from our massive resistance at 100K, then that's on you to now know how much they know. They're telling you, I don't know anything about charts. I probably have some traders that do this for me, or I just use bots to trade, or I just made a nice lucky trade earlier in my career, and my revenue is mostly YouTube and trading platform royalties, right? Most of these guys just get, and gals get, X revenue, revenue from Binance or whatever trading platform they're shilling, and it's not from trading. There are a few good traders, but they're few and far between, right? So you have to do your due diligence. You have to understand that not every big account knows what they're talking about. If they're drawing this line and saying that is the level of support where we're going to go from, understand that's their level of understanding in technical analysis, okay? So why do I have this line up here in my larger schematic for this dump? It's because you do have this support level, although weak, it's lost support here. So price is likely to come down. Let's clean this up here. Let's clean this up. Guys, and if you're getting value, please like, share, and subscribe. Consider buying me a coffee at the pinned comment below. And do know that I have a new product, a portfolio consulting product on my Buy Me a Coffee website, where I can give you in-depth consultation. It's like an hour, 2 hours per month. In-depth consultation for up to 5 assets. Balancing your portfolio, minimizing risk, maximizing profit, and then giving you entry and exit targets for each of those assets. And that's a monthly thing. You can do it for 1 month, or you can continue month in and month out. But that's on my Buy Me a Coffee website. All right, let's get back to this. So this is what I think it's going to look like. One, because again, these are indeed levels of support, but they're not ultimate levels of support. And these are the levels where they're going to say, sorry, let me just do this properly. These are the levels that they're going to yell on Twitter. Hey, you, retail, like they're not retail, buy the dip. You wanted this bull run. We're here, and now you're too scared to buy the dip. Come on, buy the fucking dip. They're going to say buy the dip here. They're also going to say buy the dip here at 81. Okay? Because you have this level of support from this multi-year trend or multi-year channel. And this is likely to come up like this. okay, retesting old resistance as new, or sorry, SR flip, retesting old support as new resistance, okay? It doesn't have to happen. Wouldn't be surprised if it did, okay? And so this is going to fool a lot of people. They're going to be like, yes, finally, we're done. That was the retracement. But again, if you already planned this, if you understand this, if you know the principles of technical analysis, where if you lose support, you retest it as resistance before continuing the trend, you don't get in this thinking it's over. You get in this knowing it's an intermittent bounce, and you're probably going to get in some alts that are finished at support, which you can ascertain in other ways that we can talk about later, but you're not going to think Bitcoin is flying through 100K at this point. No. And at this point, then I think we get the real cascade of liquidations. Like, we just fly down from 93 or wherever we are at this point, 94, all the way back down to 70. That's really going to catch people off guard. I can be wrong, but what do? As an analyst, what do I do, rather? I track the progression of this trend, and I update my my map, right? I have a map. This is my map of what I'm expecting, how I'm going to trade, and how I'm going to monitor the market. And if something should happen that deviates from this, I update my map. This is how you buy the dip. You don't just buy random green candles because you're in a bearish trend. Do you understand? I hope this makes sense. I hope this helps you all, and you're not just throwing money at random dips, which a lot of people will do, and they will lose a lot of money doing it. You'll lose a bit of money if you're doing it on spot. You can always get it back. You just have to be patient enough. You'll lose a lot of money if you're doing it on leverage, because you're going to get liquidated or stopped out. Okay, so that's the idea of buying the dip. That's how you do it, using purely price action and your knowledge of, trading, or what's it called? Price action principles, right? The principles of price action, how to read a chart, what charts look like, so on and so forth. Now, let's bring in some indicators. Indicators are good, but as an adjuvant, as a help to this. If you're only using indicators, you can trick yourself and you actually stunt your progress as a chartist. Trust me, I've seen it so many times. A lot of these big accounts, they don't know how to read charts because they've over-relied on indicators. And so if you just give them a chart, they're completely lost. They need their, $50 a month indicator bundle to be able to tell what a trend is doing, or, what's going on. And, so don't do that. You don't want to be beholden to any sort of indicator. My stochastic RSI indicator is still open right here on the daily time frame. That tells me we're nowhere close. Look how far apart these K and D lines are. So that indicator on the daily time frame is telling me no. On the 4-hourly time frame is telling me not so fast. It's not conclusive, but it doesn't look strong and bullish by any means. Hourly time frame downright looks bearish. It's here in overbought territory between 70 and 90. Okay, so that means it's about to cross and come back down. This is how you use indicators, as a supplement to what you've already done on the charts. Okay, the other indicator I like to use is the Bitcoin dominance indicator. Okay, and I talked about this yesterday in yesterday's video. Bitcoin dominance, a measure of Bitcoin's dominance vis-a-vis the rest of the cryptocurrency market. When it's going up, it generally indicates a bearish trend in Bitcoin, and an even more bearish trend in altcoins. When it goes down, it's the opposite. So if you're in a dump, what you want to do when you're looking at Bitcoin dominance, how do you use it as an indicator to tell you when to actually buy the final dip, that's what you want to do. You want to buy the actual support, not these intermediate supports, is look for Bitcoin dominance to reach resistance. Hope that's not too confusing, but essentially it's this. When Bitcoin dominance gets back to this really high time frame resistance, you're more likely than not at repose. You're more likely than not going to go as low as you can go with Bitcoin, and altcoins are going to go. Meaning, when Bitcoin dominance goes down, that means altcoins are going to run in best Bitcoin in dominance. That means Bitcoin, even though it doesn't have to run immediately, altcoins can front run it, and it's not going to dump immediately. Does that make sense? Because Bitcoin dumps, everything's going to react. But when Bitcoin gets to a point where it's no longer dumping, you're going to reach this resistance. So that's another way to use this indicator to figure out when the final low is for Bitcoin. Look for Bitcoin dominance to reach resistance. The third and final indicator that you can use is the total 3 chart. Now, the total 3 chart is everything in the cryptocurrency market minus Bitcoin minus Ethereum. So it's all the altcoins. And again, you understand that this larger pattern is a bullish reversal pattern or inverse head and shoulders, right? This is clearly the neckline. This is clearly a breakout. Just like any inverse head and shoulders that you've ever looked at in any trading manual, right? You break out, you retest, and you then break out for real. So it's no different here. You break out, you retest, then you break out for real. Expect Bitcoin to reach a bottom when this reaches a bottom, more or less, because that indicates that the entire market is flushed enough to bring down the market cap of all of the altcoins back to support. And when it's there, this is when you buy. That's the other indicator, okay? And so if I'm talking to a client in my consulting and I'm saying, hey, look, in between this month and next month, you may have to make your purchases, your buys, your entries. Here's when you do it. Open up this chart, open up that chart. Wait until that gets here. Very high probability that you'll pump soon after. You'll minimize risk in your buy. It's not like you're going to buy and then retrace a ton. Obviously, everything's a bit different, but generally speaking, if you buy on support, which you always want to do, that's one other principle of trading, buying on support, selling at resistance. You're buying at this indicator support, your asset, your coin, your bag is likely to run thereafter. So that's all I have on buying the dip. You just don't do it willy-nilly, please. Protect your capital. You're in a bull market. This is where you make life-changing money for you and your family. Play it smart, please. And again, I have that new product that I'm offering on my Buy Me a Coffee website, $150 per month, up to 5 assets. I balance your portfolio. I minimize your risk. I do fundamental and technical analysis on all of the assets, give you buy points or entry points and exit points, high probability exit points for that each and every month. All right, take care. Bye.